All right, today we're going to crack open a case that on the surface just doesn't add up. We're looking at a multi-billion-dollar company that's somehow losing tens of millions of dollars, yet Wall Street is convinced its stock is about to take off. We are talking about Primo Brands, and this, my friends, is a story about a massive corporate bet with some truly eye-popping numbers. And right here, this is the heart of the mystery, laid out in black and white. How on earth can a company that lost over $48 million also have Wall Street analysts predicting a potential 62% jump in its stock price? I mean, it seems completely contradictory, right? Well, that's the paradox we're going to unpack today.
So, what is the real deal with Primo Brands? To figure this out, we have to put on our detective hats and just follow the clues. So let's start by laying all the evidence we have out on the table.
All right, let's officially begin the investigation. Our mission, to make sense of this Wall Street mystery, the paradox of Primo Brands.
Okay, so let's look at these conflicting clues. You've got a stock trading in the low 20s, but analysts are pointing to the mid-30s. You've got a $48 million loss in what seems like a pretty simple business, right? They sell water. Taken by themselves, these clues are just confusing. But here's the thing. They all point back to one single, massive, transformative event.
And that brings us to the moment that created this whole situation. Because you have to understand, the Primo Brands we're looking at today, well, it's a brand new company.
Now pay close attention to that date. The merger between Primo Water and BlueTriton, it happened incredibly recently. This isn't some footnote in the company's history. This is the key event that unlocks this entire story. So what was the strategy? Well, it was pretty simple, really. Create an absolute titan in the North American water market. You smash together huge brands, you dominate the store shelves, and here it is, the most important part, you find massive cost savings in the process. It's this promise of savings that supposedly justifies everything. So let's see if we can find it in the numbers.
Okay, time to do what we do best, follow the money. Let's dig into the financials and see if we can find the proof that explains why Wall Street is so optimistic.
First, you just have to appreciate the sheer scale here. This new, combined company is pulling in over $6 billion in revenue. This is no small player. It's an industry giant that was basically created overnight.
But, bam, there's our paradox again. All that revenue, all those sales, and it still ends up as a $48 million loss. I mean, on the surface, this looks like a huge, inefficient machine, right?
So what gives? If the bottom line is deep in the red, where's the good news that's getting analysts so excited? The answer, it turns out, lies in a single, incredibly powerful business concept. The entire optimistic case for Primo Brands, what investors call the bull case, it all hinges on this one word, synergy. It's the simple idea that 1 + 1 can equal 3. The belief is that by combining these two huge companies, they can slash redundant costs, become way more efficient, and unlock hundreds of millions of dollars in pure profit.
And look, this isn't just some vague hope. Management has put real numbers on it. As you can see, they are targeting $200 million in savings next year and then ramping that up to $300 million the year after. Now think about that. That $300 million would completely erase the current losses and turn this into a massively profitable company. But it all comes down to one question. Can they actually pull it off?
But, no investigation is complete without looking at the other side of the coin. What could throw a wrench in these plans? What are the potential spoilers in this case? Well, a few things could definitely derail this train. The biggest is what's called integration risk. What if those $300 million in savings are just a fantasy they can't achieve? But even if they execute perfectly, outside forces could spoil the party. Things like rising costs for plastic and fuel could just eat away at those savings. Fierce competition could stop them from raising prices. And of course, there's the growing backlash against single-use plastics, which is a constant shadow hanging over the industry.
So with all this evidence in front of us, the huge potential and the serious pitfalls, let's look at how this story could end. Analysts have basically mapped out 3 possible futures for Primo Brands. And they've even put probabilities on it. They see a 50% chance of a base case, that's kind of the things go more or less as planned scenario. Then there's a 30% shot at a bull case, where management just knocks it out of the park. And finally, a 20% chance of a bear case, where the whole plan just falls apart. And this table right here shows you exactly what's at stake. Let's look at that top row, the bull case. If they capture all those savings, analysts see the stock flying into the low to mid-30s. The middle row, the base case, assumes a few hiccups, and the price pretty much stays where it is. But that bottom row, the bear case, that's the danger zone. If they miss their targets and costs go up, the stock could seriously tank, down into the teens. It all comes back to that one synergy number.
So after all that, what's the final verdict? For anyone looking at this company, what's the ultimate takeaway from all this evidence?
It really just boils down to this simple divide. On one side, you have the bull case. This is for you if you believe management can hit that $300 million target and handle any cost pressures. On the other side, you've got the cautious case. This is if you're worried they won't execute, that inflation will bite, and you'd just rather see proof before you believe it. Which side of that line you fall on is your verdict.
You know, one of the analyses I read really summed it up perfectly with this quote: Primo Brands is a watchlist candidate with upside, but downside risk is non-negligible. It's a high-stakes gamble on a massive corporate transformation. The potential rewards are significant, but so are the risks.
At the end of the day, that's what this is. It's a massive bet on execution. Primo Brands went out and built a much, much bigger bottle by combining two giant companies into one. The question that remains, the one that will decide its future, is a pretty simple one. Is bigger always better?